Good afternoon, welcome, and thank you so much for clicking on my video. Today, we're going to be getting right into some technical analysis because I got to try to do this all in one shot. But before we get into that technical analysis, we're going to start off on the daily, look at the 2-hour, look at the 30-minute, mainly focusing on the SPY and the Qs. And if you have any confusion of what we're talking about here, well, there is a chance to learn because we have 80% off the course down in the description, the full technical analysis course, just for a couple more days. Get it while it lasts. If you want to come ask questions during the live show, hey, come ask questions during the live show. We see here on the daily chart that we have done very well with dictating where this market could be going as of right now, at least how we've been viewing the market at this point from these lower levels. We have noticed that we were able to do this with scenario number 1 and curl up into this area. And once we got to these type of areas, we were able to exceed that zone, meaning we would like a daily pullback to go higher. And I think we might have that opportunity very soon. And we're going to talk about this in the shorter time frames, how it would break down and how we would continue in the upward direction. Right now, the daily pullback is what I see as a great opportunity, even if it is just to this point down here. You can see from the 2-hour chart that we have made somewhat of a move down, though. And if this is some kind of ABC move for the 2-hour chart, we can end up closing this gap in the near future. So watch carefully if that 2-hour MACD is crossing. This is the lower high scenario. Now, we have done a lot of work in this area to remain positive on the 30-minute. So a good indication that we're going to end up down here is by looking at the 30-minute chart for the SPY, dictating where I need to pay attention to for tomorrow. Tomorrow, you have 595.17 to the upside. You have 580.29 to the downside. Tomorrow will be a big day in deciding, are we going to gear up to just head higher by curling up and keeping the positive price action that we just discussed earlier in the week? We see this level broken, which means this is a new high for the 30-minute. If it can dictate a higher low, we go higher is what that overall says. But how would it break down? I'm sorry to say this for the bulls, but there is a way down here, and I will show it to you right after we take another look at these moves and see exactly where this one is. Even if bears, even if you go down to this type of level, you can still swing right back up and make that new high. What you really want to see here is a breakdown of all the price action. This will indicate that we are going to head lower. Okay, this is the bearish scenario where you drop through, you see something crazy that shows you that little pathway lower, and then you bounce up to use this zone as resistance. And then that would mean that we are going to see a downward move on Thursday, an upward move on Friday, and another trap-like move on going into next Monday to end up seeing a test of something like 564 or even deeper at that point. So this is what I would really be aware of right now to the bear side. Even if you're a bull, you should be watching for price action like that. As of right now, though, the 30-minute is nowhere near this level. So we're paying attention to the bullish things first, the bullish things first, the bullish things first, and then we'll see if that actually breaks that low to open up that pathway to the downside. Very, very good stuff. All we're talking about here is using price action and our 2-hour MACDs to show us, hey, this is the heavily dictated possible 2-hour higher low. The monthly expected moves here would be suggesting that we should see resistance here as well and end the month in the 68% zone, even though we did get that unexpected news. And so we know it's possible to end out here. If this shapes up, we need to treat it very seriously. The Qs. The Qs are very interesting because they're outside of that move as of right now, and they were able to dictate a little new high today on this 30-minute. So watch if the 30-minute just curls up at any time. You need to squeeze from these type of levels to continue to see upside. Looking at the daily expected moves, we see 527.67 to the upside and 510.15. Where is 510.15? Right by that gap. This can still be bullish. This is where you start to look for the rolls towards this middle zone in here, okay? We can draw that up for you tomorrow during the live show. The reason that we're watching this very seriously is because you have peaked your head above, suggesting that you can head up. But if this is some kind of trap, which is suggested by the SPY making a lower high here while the Qs make a higher one, ooh, that can be a problem if this 2-hour rolls down. Let's talk about the technicals with the MACD for a second. We can see that if the 2-hour is going to roll down, where would we cross on the RSI? The center line. If we were going to cross on the MACD, how close are we to crossing into negative territory? Very close. So this could pretty much be the formings of divergence on the 2-hour, which means what for the Qs? They are at risk and need to see a squeeze right now, or else you're at risk of seeing the daily pullback and heading back down into this zone down here, or at least a price point of the upward end of that being 590 or 493, my apologies, something like 493.50. These are very critical things to be watching. You notice, where is our weekly expected move? It's down there. So this is a very interesting point where you have a lot of data coming out this week. So at the end of the video, I just wanted to pull over the data. We do see that as of tomorrow, we got the FOMC minutes. The main thing people are talking about are Trump tariff stuff and NVIDIA. GDP growth rate comes out tomorrow, previous 2.4%, but the consensus on this is negative and negative. The last time we saw this, we saw a slightly better number than the negative number we were supposed to get, and the market did not care about it too much. Just for your inclination, initial jobless claims will be something people are watching for, the 10-year yield. So we'll be watching a close eye on that. And then Friday, you don't really get a break because you go into core PCE, personal income, personal spending. All of these are supposed to go down except for the one that you want to go down, which is PCE. So I guess unless you want more and more growth, we'll see. But you have a long bit of data to get through all the way through Friday. So be very cautious in this area because this is our 68% zone right here. And you are getting the shapings of some kind of reversal can take place if that 2-hour chart crosses down. I wish I could have spent more time with you guys today. I went through it as clear cut and quickly as possible. I just wanted to make sure to get you guys that information, get you guys those daily expected moves, and show you guys how this thing would overall, at least from the standing we are at now, would be able to break down. But if it needs to go up, hey, you got to squeeze right now is what I see for those bulls. So thank you guys so much for watching this video. Check out that course that's down there. If you like any of this stuff, we go through it very, very simply in the course for you. If you want to ask questions about it, come to the live show in the morning. But the full technical analysis course is 80% off down there. So thank you guys so much for catching that. Thank you guys for being here. I'll see you guys in the morning. Peace out.